Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. Now today we've decided to step outside the studios for the moment as we join the Financial Planning Institute of Southern Africa, commonly referred to as FPI. Now this is as they officially launch their Global Consumer Survey. This particular survey from across the globe takes a look at the relationship between consumers and certified financial planning professionals. What are the key concerns with regard to this relationship? Are there particular trends that are working? And more importantly, how to continue strengthening the relationship of consumers with certified financial planners? Well, that's exactly what I got into discussion with David Kop. Not only is a CFP, but also the head of department for advocacy together with consumer education at the FPI. Take a look at the conversation that we had with him discussing the Global Consumer Survey. David, thank you so much for your time today, joining us as a CFP professional together with the head of department for advocacy together with consumer education at the Financial Planning Institute of Southern Africa. Thank you so much for inviting us to the release of the inaugural and launch actually of the Global Consumer Trends Survey. But to come back to the conversation regarding the survey, why is it so important and what is the objective of such calibration of data?
So the objective of the data was really try to get to understand consumers' behavior and how they deal with financial planners, so that we could understand them better and make sure that we tailor the services to help them achieve their goals a lot better.
First things first, the relationship between a professional and a consumer. Do consumers even know that there are different ranges of professionals within the financial services industry?
So again, the survey showed that people do understand who a CFP professional is. The figures in South Africa were 42% of the respondents did say they understood what a CFP professional was. But I think the understanding is not quite where we would like it to be. I think some of the confusion comes in because the term financial planner is not protected in law. So anyone can call themselves financial planner. So somebody might deal with someone who they think is a financial planner, but they're just using that term and may not necessarily have the right competencies and skills.
So the key is to have that certified financial planner
Correct.
at the end of your name, which basically means that you're accredited.
Yes.
How do we build up this lack of knowledge that happens to be in society? Are there measures and means that we can implement?
Yeah, so the FBI has been doing it through a engagement with consumers on a financial education viewpoint. So we've got a FPI My Money 123 program, which is offered free of charge by our members on a volunteer basis. So it's a joint effort between the Financial Planning Institute and the members of the Financial Planning Institute who hold the Certified Financial Planner mark. So as they're out there and engaging with clients, they tell clients what it is to deal with a CFP professional, and they also demonstrate to clients what it is to deal with a CFP professional. And the FPI then does it through the consumer education and make sure that we are educating people not only about what a CFP professional is, but how to manage their finances.
Speaking of that, the numbers certainly do give us some detail. I think 37% of consumers who do deal with CFPs actually feel very confident about reaching their financial objectives, as we would hope it would be.
Yes, most definitely. As you deal with the CFP professional and you engage with them, so we're not just talking about once-off interventions, but you actually do the financial plan, which is a lifelong thing. We do find that people are more confident when they have a written financial plan and they know where they're heading in terms of achieving their goals.
For us to see a boost in that 37% figure, does it again take further knowledge, marketing and exposure of CFPs to consumers?
Yeah, most definitely. I think consumers need to understand what they want out of a relationship with a financial planner, and the financial planner needs to explain what services they do offer and what they do. Again, one of the key things in our mind is that the consumer must have a written financial plan, because if you don't have the plan, you don't know where you're actually heading, and then how can you have confidence in achieving your goals if you don't really know what they are?
Something else that came through from the report, though, that puts this relationship in jeopardy is trust, which I understand is quite significant. Almost 70% of respondents say that they don't know who to trust in the financial planning fraternity. How do we fix this?
So again, it comes through education and engaging with the consumers to do that. And again, our belief is that a CFP professional is somebody who you can trust. And it's not just because they have the designation, but what they have to do to go to get the designation. And I refer to Stephen Covey's work in The Speed of Trust. He said there are 4 core principles for credibility, which is your integrity, your intent, your capabilities, and the results that you deliver. So from an integrity viewpoint, a CFP professional actually signs voluntarily up to a code of conduct, a code of ethics and professional responsibility. And one of the key principles of that is that a CFP professional will place their clients' interests above their own. So in terms of law, financial advisors must work in their clients' interest, but the test is whether the product that they've advised on is suitability. The test for a CFP professional is, did you in fact put your own interests aside and look after your clients' interests before your own? And we think that's quite a significant change. And then to look at capability, a CFP professional is required to hold a postgraduate qualification, either the postgraduate diploma in financial planning law or a BCom honours in financial planning. When you compare that to the industry minimum requirement, which is an NQF level 5 diploma, it's quite a lot more. Plus, CFP professionals also voluntarily subscribe to do continuous professional development, which is not yet a requirement for financial advisors.
Keeping with the issue of trust, though, it does seem as though it is quite prominent, especially in a country like South Africa, where we have a significant amount in informal savings, upwards of the billions. How do we rebuild that when fundamentally it also seems as though planners themselves have gotten a bad rap, and reputationally the damage has been done, and they're viewed more as product pushers versus individuals who keep the consumer's value at heart, as you've mentioned?
Yeah, so I think the legislation is going some way to repair that relationship, but again it comes down to financial advisors and financial planners actually doing what they say they're going to be doing. So this is where the results aspect comes into it. If you promise to deliver something to a client, you must just deliver on it, and that's the way that we can start rebuilding trust. So it's about living the values of putting your client first. And our opinion is too, we don't actually need something like treating customers fairly, because on whole, financial advisors and financial planners inherently do treat their customers fairly. There are some instances where things go wrong, and there are some people who don't do what they're supposed to do, but on a majority, and particularly as CFP professionals, we find that they are serving their customers' interests.
I'm glad you touched on treating customers fairly, because that also brings us to the aspect of regulation. Some of the respondents also came out quite strongly. If I'm not mistaken, the numbers are in the 40-odd%, mentioning that they hope to see further regulation in the financial planning industry. But at the moment in South Africa, aren't we seeing a lot of stringent regulation that actually works in favor for the consumer? You touched on TCFs. We do have the retail distribution review also coming up. In a nutshell, are we actually moving towards the right direction?
Yes, I think we are, and the legislation implemented correctly will benefit both the profession as well as the consumer. So yes, having the legislation will help to build that trust and continue to build the trust, and it will also protect the consumer from some of the bad practices, and I think that will go some way to mending the relationship. As the FPI, we engage with National Treasury, with the Financial Services Board, to make sure that the legislation that comes through first and foremost bears the consumer's interests at heart, and secondly, make sure that we do protect the profession, so that the profession will be there to serve the consumers who need to be served in a professional manner.
As an industry overall, would you say that you are responding in an appropriate measure, especially when it comes to regulation from the perspective of assisting the consumer? And more importantly, is the consumer aware of the amount of legislation that's around that's there to protect them?
So, first question, yes, I think the industry is responding quite positively to this. It's been a very consultative process, so it hasn't just been, yes, the laws and it's going to come in. We've been engaging with the Financial Services Board, and I'm going to talk particularly on behalf of the members of the FPI, the CFP professionals. They've responded mostly positively to the changes, with a few concerns which we've managed to raise with the Financial Services Board. And as we see the revised drafts coming out, those issues have been taken into account and are amending the legislation. We still feel that it is protecting the consumer with the revised views that are coming through.
What about cost? So often some South Africans refer to the high level of cost and accessibility to financial planners as a hindrance. I understand from the FPI's perspective, you do have recommendations that you've brought forward?
Yeah. So we don't recommend a particular fee structure, but we have put out a toolkit for our members to help them develop their own fee structures in terms of looking at their costs of running the business and how much they should on-charge their clients for that. And I think the reality is there are various business models that can be used using technology to engage with your clients, using face-to-face. So there is a wide range of cost structures that can be used, and I think there is a means to suit all consumers. So they shouldn't worry about cost being the factor. Engage with a financial planner. The first meeting that you have with them, they'll detail how they charge, what their charges look like, and then you can decide based on that if you want to continue with the relationship.
If we do take a look at the way forward from the fundamentals that have been revealed in the survey, how do we extract value here, not only for consumers, but for professionals too?
So from the professional side is to look and understand that this is what consumers want, this is what consumers are looking for, and that's why it was quite key to find out what consumers' priorities are actually with engaging with a financial planner. So our professionals will be able to take that information and make sure that they tailor their service offerings to meet those consumer needs. From a consumer viewpoint, I think the key is to start engaging with a financial planner and find somebody who matches your personality type and who's able to deliver the services that you are looking for.
If we do take a look at the current economic climate, though, in South Africa, there's quite a lot happening. Expectations of below 1% growth, if any, that's if we manage to dodge a recession, rising interest rates as well, inflation also expected to increase. So fundamentally, consumers will be under pressure here. Is now more than ever the time where you would advise South African consumers to seek professional advice?
Most definitely. I think waiting until you have money to deal with a financial planner, and particularly a certified financial planner, it's too late then, because you've maybe already developed your habits. I think being under pressure now, and yes, you're quite right, the consumer is facing massive pressure with food price inflation, interest rates ticking up. Now is the right time to actually consult with a financial planner and make sure you have a plan in place. Make sure that you've reviewed your budget, you understand what your expenses are, where they're going, what you can comfortably cut back on if you need to, and that your plans for the future are still protected through this tough economic times.
David, as we wrap up the conversation for this evening, the key takeaway points that you want our viewers at home to leave the show knowing this evening?
I think the first one is start with a plan, okay? And try it yourself if you feel comfortable with that. But the best route is to look for a certified financial planner, engage with one, and make sure that they can help you draft a plan that is going to match your needs and goals.
Well, that's how we wrap up my conversation with David Kop, who is the Head of Department for Consumer Education and Advocacy at the FPI. Now, you too can participate in this conversation by sharing your views, comments and suggestions following the release of the Consumer Global Trend Survey. You can tweet at CNBC Africa using the hashtag Finance410 or tweet myself at Gugulethu. Until next time, though, from myself and the team, we wish you a wonderful evening.